You guys asked for it, so I'm gonna give it to you, breaking down the numbers on my commercial strip center that I bought about a year and a half, 2 years ago. And after everything that has transpired this year, post-COVID, and retail real estate being one of the hardest hit products, was this actually a good investment? You guys wanna know what the numbers look like? I'm gonna share with you, coming right up. What's going on, guys? Matty A here. Welcome back to my channel. In today's video, I had many of you in previous videos ask, hey, we want to know, how did that real estate strip center actually do? This was my very first commercial investment, and I figured in this video I would break down, how did I find this investment? What did the due diligence process look like? What do the numbers actually break down to? And how I was able to go about financing this property. And I figured I'd close it out by sharing with you guys whether or not commercial real estate, retail real estate, strip centers like this in general are a good, bad, safe, risky investment post-COVID and this world that we now live in. So we're gonna break that down in a lot more detail. But first and foremost, if you are new to my channel, be sure to hit that subscribe button. I actually, I got this cool little, check this. I don't know if you guys can see this. This cool little stream deck, and Tone, my master wizard millennial who keeps all of my cool digital products on point, got this dialed in for me. So if you're new to my channel, be sure to hit that subscribe button. If you enjoy this video, you know what to do. Give it a thumbs up, hit that like button, and if you have any questions, comments, feedback, where's it at, Tone? Be sure to drop me a comment below. I gotta make sure that it's actually working. Okay, cool, I can see myself on the screen. So with that being said, this is a channel that's all about real estate, investing, and lifestyle freedom. So if you are somebody that is on their march to $1 million and beyond, know that you're gonna find all kinds of content here on my channel, as well as on the Millionaire Mindcast podcast, which is a top 100 business podcast and top 100 entrepreneur podcast. So if you haven't checked out the show yet on all podcasting platforms, or you can check them out here on the YouTube channel, be sure to subscribe so you never miss another episode. All right, so number one, how did I find this property? Just like I have found many other properties, they always come from relationships. Oftentimes, yes, I do a lot of pay-to-play marketing. I do pay-per-click. We do Facebook ads. We do direct mail. I do radio ads sometimes. And some of my best deals, oftentimes, honestly, my greatest deals have always come from personal relationships. So if you are someone that is really looking to find opportunities, it's all about just word of mouth, letting people know what it is that you're looking for, posting on social media, sharing that you're active in the space, what your needs are, what your wants are, and you never know where those opportunities are gonna come from. So I always like to make my asks and my requests of what my goals are and what I'm looking to accomplish very known to anybody and everybody. When people ask me what I'm looking for or what I'm up to, I will always share that. And so in this particular case, a broker that I've done a lot of business with in the past, he ended up seeing one of my recent posts, and I will always, probably once or twice a week, put something out on social media saying, hey, what do you guys have? Here's what I'm looking for. If you know anybody, da-da-da-da-da, right? And oftentimes you'll see little messages come in and people will end up sending me deals. And this is where this deal came across. It was an off-market opportunity. This broker had already been negotiating and working with the seller. They were looking to get out. It was actually their parents' property. It was in a trust. The son and daughter had been managing the property, and they were just tired. They wanted to take that legwork and energy and effort and kind of consolidate the commercial strip center and everything that went into that, running that, into one triple net lease property. So the broker was going to help them do that. He said, hey, I think I got a buyer in mind, Matty A, of course. And he gave me a ring and said, I think I have something that would meet what you're looking for. So what do I do next? Well, I went out to the property, toured it, and that is when ultimately, after looking at some of the financials and kind of getting that 30,000 foot view of what it could look like, going, I like this. I think this meets my investment criteria. I like the neighborhood and the area. It's an A neighborhood, A area. It's probably a B or a C type of product. It's a little bit older, a little bit run down, but still had good tenants in it. A lot of good traffic going by it. And the financials were relatively good. So I decided at that stage I was going to put in what we call a letter of intent. Now, this is not a formally binding contract. This is taking a verbal offer and putting it in writing and saying, hey, if we were to go into an agreement here, here's all of the things that I would be looking for, I would be offering, terms I would be wanting. Now, this is their opportunity to kind of engage with that letter of intent, see if that's something that they want to accept, counter some of those terms, and then we formalize an actual agreement and binding contract that we would open escrow on, which is what we did. So once we opened escrow and we were in a legally binding contract, now that we have that agreement and we are moving towards the closing table, the next step was obviously going through the due diligence process. Now, this is really an important phase of the escrow process and could make or break your deal. And I often see investors, new investors, that cut little tiny corners ultimately end up making really big mistakes that financially cost them a lot of money, completely make the deal a bad deal altogether. So this was a really important part of the process, especially being that this was my first commercial investment. And thankful that I have a lot of great mentors around me that kind of gave me some insights and told me what to do and what not to do. But obviously doing hundreds of transactions on the single family side, I still knew some of the basics. But when it came to doing the physical inspections on the property and the product itself, pretty self-explanatory. You're going to want to hire licensed, bonded, insured companies that are experts in what they do to come in and to comb through everything, even some things that you can't see with the naked eye, to make sure that the physical condition of the property is where you think it's at, and if it's not, you're aware of it. So that way you can go back and renegotiate terms or, concessions with the seller or repairs that need to get done. But the physical inspections are relatively self-explanatory. In the commercial world, it is the financial and the paper inspections that you really want to make sure you're digging in with a fine-tooth comb on. What do I mean by that? Well, when we're talking about the financials, what the seller provides you, you need to, it's completely up to you to go out and verify all of those things, looking at all their tax returns, looking at the P&Ls, whether that is, something specific to do with the terms that have been agreed upon in certain leases and how those in the lease are making sure that they're properly reflected and how the income and the expenses are being reported. You want to know all of the financial aspects of the building, and most importantly, combing through all of those leases, because at the end of the day, those leases dictate how much income is generated on that property. And what I found in this process, that there were a lot of these leases, they were literally written up on chicken scratch, old school leases by the 80-year-old landlord who had owned this property. And back way when it was okay to do that, it hadn't been brought up to kind of modern times and current practices in the real estate industry. And therefore, I found there was a lot of opportunity to build in some rubs and some cam fees and some areas that we could increase some revenue on the tenant side that allowed us to drop more profit to the bottom line, as well as put more of the expenses and the responsibilities on the tenants. So there was a lot of kind of paper flipping and optimization that could be done on this particular asset, and we found that out in the due diligence process. So as we combed through all of those things, then we built out the pro forma, and I'm going to show you what the pro forma I thought it was going to be actually ended up being a little bit better. So let's go ahead and jump into my computer real quick. I'm going to show you guys the actual financials of where the property is performing at right now, so you can see at least on paper what it is bringing in to me from a passive income. And I wouldn't say passive income because there's still a little bit of active management that is going on with this property each and every month, very minimal. But what kind of income, net income, this property is generating. So let's go ahead and take a look. All right, so real quick, I'm gonna take you guys through just a basic property analyzer so you can kind of see where things are at on this property financially. I bought it for $925,000. I ended up leveraging private money for my first loan. This was a lender that I've done probably about 100 private loans with on flips, and I had a good track record with them. Made a lot of money working with me. They trust me. So this was something, after we ran through all of these numbers and I showed them how much income this could generate and how much the payment was going to be to them, that it was really a safe investment for them. So went through, crunched all these numbers. Down payment was $231,000. I didn't put a ton of money into the repairs. That's something, looking back, I probably should have done a little bit more on the front end, because I wanted to incentivize as I go in and fix up the building right away and kind of give that good faith that the new ownership group is going to take care of the building. We're going to make it a nice place for these people to operate their businesses out of, to be a good reflection of their company to the patrons that are coming to our plaza. I could have put more money in on the front end. I didn't, and it ultimately did end up working out in my favor, but that's something that I would definitely do differently and have done differently on commercial strip centers that I bought since then. With that being said, these rents down here were, I don't want to say extremely lower, but they were a lot lower than what they are here. As I went through those leases and we renegotiated the terms with the tenants, we not only renegotiated some of the expenses and liabilities to be put on the tenants as they run and manage their businesses out of this space, but also to increase their rents a little bit, which ultimately helped me drop more bottom line profit down that I was not seeing before. So we're bringing in about a little under $10,000 a month from all of these tenants in the building. And as I went through all of the expenses and saw certain areas that I could pass those expenses off to the tenants in the new leases that we wrote up, or if there was ways that we could minimize and constrict some of those expenses, I got the total operating expenses down to about $2,000, a little over $2,000 a month on this commercial strip center, ultimately leaving the operating income before debt service meaning my loan, to about $7,800. It's pretty damn good. I was excited about that. And as I was in my first mortgage, I have a higher interest rate because of my private lender. I was able to extend that amortization out a little bit further, and I'm now going through the process of refinancing this building and getting it down to 3.25. So that's drastically going to drop my mortgage payment and increase my cash flow. But overall, my monthly cash flow, and this is obviously pre-tax, is right around $3,000 a month on this commercial strip center. So overall, a pretty big winner when you can say that you're getting $3,000 a month in passive income. It's a cap rate of about 10%, which is really hard to find in California. Good debt coverage ratio, meaning that the income coming in is more than enough to cover the debt that needs to service this mortgage. And the return, not only from the cash flow that I'm getting, but also the debt pay down on the mortgage, pretty healthy return on investment when you look at this opportunity. So all around, I'm very grateful for this building. It kicked my ass in a lot of ways. It taught me a lot of what not to do. It taught me a lot of what to do on buildings that I've bought since then, which have paid major dividend, and not only how I negotiate and structure terms and leases and communicate with tenants, but also how to manage the physical condition of the building and how important it is to build a brand and a facade and a condition and an ecosystem that the business community feels proud to be a part of. So what do I actually think about commercial strip centers? We've heard of the gloom and doom when it comes to commercial and retail plazas in general, and big box retail being a dying breed and going extinct. And you see all of these different, news feeds and articles coming out about staying away from them, get out as quickly as you can. And what do I think about that? So here's my final conclusion. I still think that commercial retail strip centers like this one have a place and are promising in certain portfolios. One, they're a good diversification play if you are all in single family or if you're all in multifamily. I just think that it has to have a few key variables. Number one, it has to be in a good location. Number two, you have to have at least one or two really strong anchor tenants that you know are going to be recession proof, that are going to stay in there, and are also going to be a good advocate and addition to the culture and the community that you're looking to create there. Number three is, I think they have to be specific types of businesses that need a storefront and need to service the community and people that are still looking for brick and mortar. For example, there are a lot of convenience stores, there are dog washers, there are hair salon owners, there are a lot of those mom and pop style businesses that they need a physical space to be in, and there has to be certain types of real estate product that can service them. So when you think about, the big box retail brands, yes, I do think a lot of those are a dying breed and they're going to continue to move online, but then you still need those service centers for the communities that and neighborhoods that are around them that ultimately have foot traffic, do need a physical space to go into, and the companies and the small business owners want a product and a brand that they can align themselves with, that they're proud of, that they feel safe in, that they know is clean, and ultimately has a great business and real estate investor or landlord or operator behind that they can partner with to call that place home. So I have bought another commercial strip center. It's performing well just because we've taken that exact same approach. I will probably continue to look for more of those and buy in the next dip, because I know that commercial retail, when it's poorly run, can go to shit really quickly. So hopefully you guys enjoyed this video. If it was valuable to you, be sure to share it with a friend, a family member. If you're not subscribed to the channel yet, let me see if I can find my button. Subscribe to that channel. Be sure to hit that like button, as well as drop me a comment below and let me know if you guys have any questions or follow-up feedback on this video. Until next one, keep investing in yourself and your wealth on your march to $1 million and beyond. Peace!